Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today, as every weekend, I want to give you my weekly update on my real money North American portfolio for week 19 of 2021. So first of all, I want to go through the Q1 earnings of Alibaba. Then I will tell you what stocks I bought last week, which dividends I received, and then we take a look at the overall performance. So let's go. But before we start, don't forget to subscribe, like and share my videos if you find any value in that. Thank you. So let's start with the Q1 earnings of Alibaba. Therefore, I go to a report from the Insider, and there it said Alibaba recorded a quarterly operating loss of 1.17 billion in its fiscal Q3. This is a little bit difficult because the fiscal year of Alibaba is not the calendar year. This is a quarter which ended at March 31st, 2021. The loss, the first since the China-based e-commerce giant went public in 2014, resulted from China's antitrust regulators fining the company 2.78 billion for taking advantage of its leading position in China's e-commerce market. So on the one side, we have a loss of 1.17 billion, and this comes just from the fine of 2.78 billion. So without the fine, they still would be very, very profitable. The retailer still posted impressive retail revenue growth and cracked 1 billion users despite the regulatory attention. Alibaba's total core commerce revenues for the quarter were 24.63 billion, up 72% year over year. It also recorded 1 billion annual active customers globally in a fiscal year for the first time. So overall, I would say good numbers, impressive numbers. Especially the growth of the revenue is still there, and this looks pretty good. So on the business side of the things, I think there is no problem. Everything is fine. But despite of that, the stock lost after they reported their earnings over 5% to now $208. And since the peak in November 2020, Alibaba lost over 33% of value. This is really a big decline. It seems like even if the business is running and really running good, there is a lot of fear. There is a lot of fear of the restrictions of the Chinese government, of the fines of the Chinese government. And so fear, loss of trust maybe, uncertainty. And this, of course, is a big problem for the stock price of Alibaba. But as Warren Buffett once said, be fearful when others are greedy and greedy when others are fearful. And therefore, this is maybe a great chance to buy into this overall great company. Of course, there is risk, and maybe there's also a reason to be fearful, but also out of that negativity, there is also a big chance, I think. So Charlie Munger, the compagnon of Warren Buffett, just bought Alibaba too. Maybe this is really a situation where the market, because of the fear, is just irrational. And so Charlie Munger puts his chance and bought Alibaba big time. And with that, let's jump to my transactions last week. And first of all, maybe not that surprising, I added more shares of Alibaba. I added to my position 4 more shares on May 13 for $206.94. And therefore now I hold 26 shares with a purchase price in average of $227, and I'm down around 8%. And if Alibaba will maybe go under $200 or even less, or will be around the $206, $210 mark, then I think I will add over time more and more, because I think this is really a big chance, despite all the problems and all the political risks, of course, never forget that. And then I also bought Tencent. So also another Chinese company. I made a video about Tencent, a full analysis about Tencent earlier this week. You find the link to this video here up on the screen or down in the description below. There I go through the full business and explained why I bought Tencent. And I bought Tencent on May 10th. I bought 34 shares for $74.85. And I'm up with this position right now 2.3%. And with this transactions, my whole portfolio, my whole pie of my portfolio look like that. Alibaba already is 5.28% of my whole portfolio. Tencent is a little bit less with 2.5%. And there you also see all the other holdings in my portfolio. And if you're new to my channel, you find deeper analysis to all of them on my channel. I put the link to the watch list here just up on the screen. And if you find any value of that and of the idea of long-term value investment, then just subscribe to my channel, like and share these videos, and join me on my road as a long-term value investor. Then take a look at the dividends. Last week I received my dividends of American Express, and this was $14.62. And this despite the fact I already sold my American Express stocks on April 26 with a gain of 66%. So here on this chart you just see with the green dots when I bought my American Express shares, and then on the red dot you see when I sold. So maybe a little bit too early if you look at that, but for me it seemed like American Express at this point was just overvalued in my view. So maybe too early, but however, so I'm quite happy with this trade overall and just received a little bit of dividend last week even from this. And then last but not least, take a look at my performance. First of all, take a look at every single stock and the performance of every single stock. And here you see Imperial Oil is the best performing stock in my portfolio right now with a performance of 115%. And of course, Imperial Oil belongs a lot to the oil price, obviously. As I said also in other videos, when the oil price will be around maybe $70, $75 around that, then it's time for me to sell Imperial Oil, because the oil business is just cyclic, and then at some point we will also have a downturn again. So I'm not right sure how I handle that. Maybe I will put a stop loss somewhere, maybe a trailing stop, but overall a very, very good trade so far. And then followed by Legend & Platt, also doubling already. And then you can see the performance of every single stock in my portfolio. And as I said before, you find deeper analysis to all of these stocks where I explain why I bought and when I bought these shares. And I hope you find some value in that. And of course, lately, especially Intel, my biggest position in my portfolio, and also stamps, also Alibaba was very weak, but overall still a great performance of over 70% since the start at the 2nd of December 2019, which is a big outperformance of the S&P 500 over the same time span of over 36%. This is quite impressive for me. And we will see how this will work out over the long term. So that's it for today. If you liked the video, please like and share, subscribe to the channel, and then we will see the next time with another analysis of another stock. See you then. Take care. Bye bye.